Hi there, welcome to Kneppy Invest and welcome to another technical update video. It is Sunday, the 6th of October 2024, about 9:30 a.m. Daylight saving has kicked in for those states who have it. Queensland does not, and I'm thankful Queensland does not because I am a morning person and I love waking up when the sun is coming up around about 5 a.m. The best time of day. Now, for those night owls who want to fight me right now, I can understand where you're coming from because I actually used to be a night owl and then I changed. And the reason I changed is because I worked in Japan for a while and all my shifts started at 2 or 4 a.m. in the morning, and that just changed me. And to be honest with you, it changed me for the better. I just prefer the mornings over the evenings. Anyway, this is not a video about daylight saving, night owls versus morning people. This is a video about the technical update in regards to indices, commodities, bonds, bitcoins, and also individual companies. So let's get stuck into it, looking at the Australian indices. First, focusing on the XJO. Now, some people might say, why not the XAO, the All Ords? Well, the difference between the XJO and the XAO is just one letter. Otherwise, they're almost identical. For instance, this is the XJO, and this is the daily chart, and this is the XAO, and they're almost identical. The odds is 300 companies, XJO is 200 companies, and so that 100 company difference is not that much. It's a very small part or portion of both indices. Anyway, let's go back to the XJO. And the first thing you note when looking at the daily chart for the XJO, it's in an uptrend. In fact, it's been the uptrend for all of 2024. The bottom in late 2023, which was towards the end of October, was around about 6,800. And right now we're sitting at 8,150. Now, a few interesting things about the XJO. There is, it is at the top of the trading range, which is that sloping orange line. And briefly on Monday, well, maybe not briefly, but on Monday and into Tuesday, we were just above the top of the trading range. In fact, on Monday, I was thinking, ooh, is this a breakout? And it didn't last very long. And then we slipped back on the Tuesday. And in fact, it was overall a negative week. We're down about 0.7% for the week. And if you take away Monday, we're down probably about 1.5 to 2% for the week. Now, the other really interesting thing about trading on Friday, even though it was a negative day, there was some buying late in the day. Maybe not late, but there was some buying during the day. And interesting enough, the buying came in when the XJO fell to 8,100. And that's an important level. In fact, that is a support level for the XJO, not a long-term support, fairly short-term support. The reason that's support level is if we go back to late July, early August, just before we had that two really big down days, the XJO got to 8,100, then fell away. Then once it recovered from those two really big down days, it got back up to 8,100. Then we had another big down day on the 4th of September. And then finally, we broke through 8,100 on the 16th of September. And then we kept going up. And then we pulled back twice to about 8,100. So 8,100 is a significant, and maybe I'm being a little bit overdramatic saying significant, but it is an important level for the XJO right now. And the very fact that we did see it bounce, in fact, I'm going to see when it bounced. So let's have a look at the 5-minute chart for the XJO. And I didn't quite hit 8,100. It got very close. So when I say close, I'm talking about 8,107. So I'm just picking, it's just being a little bit picky if you're saying, it didn't really bounce off 8,100. It got close. Anyway, it bounced off 8,107.6 at 11 o'clock. So after 2 hours of trading, and then the rest of the day was okay. I know. So there's a few ways you can look at the XJO. And in fact, let's have a look at the weekly chart. So the first thing I noticed when I look at the weekly chart is we're at the top of the trading range. And in fact, if you go all the way back to 2009, when this upwards channel first developed, we've only gone above the top of the trading range once. And that was in August 2021, after the XJO had risen, I think it was 11 months in a row. And it only did briefly. In fact, maybe for a few days. This week, it went above it for like 1 day and then fell back. So overall, the XJO was down 0.76%. Now, we've had a really good run since October last year. Now, in October last year, the XJO did get down to 6,800, which was not the bottom of the trading range. So just because we see movements up and down doesn't mean the top of the movement will be at the top of the trading range or the bottom of the movement with the bottom of the trading range. In fact, the last 3 times we have seen the XJO or the markets pull back. It didn't quite get to the bottom of the range. But if we do have a correction, wouldn't be surprised to see a 20% correction. And if we do get that 20% correction, we'll be at the bottom of the trading range, or maybe even slip below the bottom of the trading range. So all I'm doing right now with the XJO is just waiting for it to break out, either above the top of the trading range or maybe below it. In fact, if it drops below the bottom of the trading range, that could be a time to get interested about going all in, deploying all your cash. So that is something a lot of us are waiting for, a little bit of weakness in the market so we can go fully or become fully invested. If the XJO keeps on going on a tear, if it breaks above the top of the trading range, potentially that will just be the start of a new trading range for the XJO. Anyway, so the main thing is we're near the top of the trading range and 8,100 is an important level for the XJO. Let's move on to the XSO. Probably less bullish with this one. However, in saying that, if we focus on the daily chart, the XSO had a really good day. What day was that? A really good day on Thursday, 26th of September, up almost 2%. It looked like that was the breakout for the XSO. Small cap enthusiasts, small cap enthusiasts were jumping with joy, giving each other high fives, that sort of thing. But we did see a little bit of weakness in the XSO the last 3 trading days of the week. But we did see a little bit of buying coming in, and the XSO closed right on that breakout level, which is 3,100. In fact, the XSO closed at 3,102.4. Now, I was going to say that the American markets had a really good day on Friday, so I expect a pretty good day on Monday, but it is a public holiday on Monday, so no trading. In fact, that means I don't have to do an ASX Daily Rundown video. Well, there you go. Didn't even think about that. Anyway, so no trading on Monday, and I was thinking if we did have trading on Monday, I would expect a pretty good day. I would expect our indices to be up about 1%. Now, what happens in the American markets on Monday is going to be very important for our Tuesday session. If they have another really good day, I would expect some really good buying coming in on the Tuesday session in Australia. So the most important thing with the small caps, the XSO, is it right now is sitting right on support. So if we do see it rally, that is just confirmation that this was just a bit of a test of the support level, and now it's off to the races. So interesting times for the small caps. Not confirmation that it's broken out just yet. I need more confirmation. Okay, so that's the Australian indices. Now let's turn our attention to the American ones. And I've already said they had a really good day on Friday. In fact, the Nasdaq was up 1.22%. Dow Jones up 0.81%. The Russell 2000 small caps up 1.5%. And I don't have the S&P 500, but they would have had a pretty good day as well. Now, the Nasdaq, I would probably say the Dow Jones is looking better than the Nasdaq. However, the Nasdaq is looking like it's moving into an uptrend. We have seen a higher high and potentially a higher low. That's just based off what we saw on Friday, up 1.2%. And I wouldn't say there was a bit of buying on Wednesday and Thursday, but we didn't see a lot of selling. And the Dow of the Nasdaq didn't make much movements either of those days. In fact, up slightly, up 0.15% on the Wednesday, and down 0.05% on the Thursday session, which tells me that there was sort of like a fight between the bears and the bulls. And then on Friday, the bulls won. Not only that, the Nasdaq finished towards the high of the day. In fact, if we have a look at the 5-minute chart, there would have been a little bit of selling during the day. Yeah, so it opened near the high, bit of selling in the first hour or so, and then the buying came in. So that's actually fairly bullish when you do have probably the the sellers were all depleted within the first hour of trading, and then the buyers came in and forced the Nasdaq to actually by the end of the trading on Friday, the Nasdaq was at the high of the day. So a really bullish day for the Nasdaq on Friday. And if we delve a little bit deeper, go into the weekly chart, there's nothing else you can say. Monthly looks bullish, weekly looks bullish. This is just the Nasdaq. Now let's turn our attention to the Dow Jones. In fact, I would actually say I'm more bullish on the Dow Jones just because it's near the all-time high. The Nasdaq is still a little bit off from the all-time high. So the all-time high for the Nasdaq was back in July, just below 20,750. So a little bit of work to do for the Nasdaq to get it back up to its highs, but I think it can do it just based off this. But the Dow Jones is very close to its all-time high, and it also had another good day, up 0.81% on Friday. Now, if you do look at the last few weeks, it hasn't really done anything. It's gone sideways. Sort of traded in a range between 42,000 and 42,400, but there's nothing to complain about this daily chart for the Dow Jones. It's in an uptrend. If you had a sort of company in your portfolio with a chart like this, you'd probably be fairly happy. Weekly chart still looks pretty good. Probably not as good as, say, the Nasdaq over a longer period of time, but no complaints. I am not bearish on the Dow Jones, Nasdaq, even possibly the Russell 2000. Let's have a look at this one. I'm definitely not as bullish about this particular indice, which is a small cap indice, but definitely if you just focus on the last, we'll say almost the last year, started to move into an uptrend in December. So that was 10 months ago. It's looking pretty good. Just focus on those last 10 months. It's looking pretty good. Got to get through this little purple box. That's my little resistance zone. So if we focus on the daily chart, the Russell 2000 has gone into this purple box a few times now and has pulled back. So I need to see it get above this purple box. That would be really good confirmation that the Russell 2000 is in an uptrend. But overall, daily chart looks good. Weekly chart looks good. Would have no complaints if I had this sort of chart for a company in my portfolio. But again, I just want to see that purple box broken out. Okay, so that's the American indices. I think they look pretty good. Australian indices look pretty good. I'd say the small caps, the XSO is probably the weakest out of all of them, but even that looks pretty good right now. Okay, so let's turn our attention to the international indices. And I always show you the same ones. Nikkei, Hang Seng, DAX, and the FTSE. And maybe one day I'll show you the Djibouti stock exchange indice. I highly doubt Djibouti has a stock exchange. Djibouti does not have its own stock market. There you go. But some multinational companies with investments in Djibouti are publicly traded. Okay, let's pull our money together. Let's go to Djibouti and start the Djiboutian stock market. Let's do it. Is Djibouti a rich or poor country? I would say it's one of the poorest countries in the world. Very urban. Yes, very urban. I just want to go to Djibouti just because who goes to Djibouti? No one goes to Djibouti. And that could be my thing. I'm the person who's been to Djibouti. What countries invest in Djibouti? Probably China. United Arab Emirates, Kuwait, Qatar, and United States. Not China. What's the biggest problem in Djibouti? Widespread poverty. Okay, yeah, no surprise there. Anyway, this video is not about Djibouti, but maybe one day I'll do a video on Djibouti, me traveling, exploring the natural wonders of that very small country. For those who don't know where Djibouti is, and some people doubt this is even a country because I just like the name. Djibouti is sort of to the north of Ethiopia, Somalia, that sort of area, just to the east of Sudan. It's on that sea. There it is. It's a small country. Eritrea, there's Eritrea, Ethiopia, Somalia, Sudan. So Red Sea, Gulf of Aden. Yeah, Red Sea. I wasn't exactly sure where it was in relation to the Red Sea. So this must be some sort of strait. Bab al-Mandab Strait. There you go. Anyway, let's move on to discuss something to do with investing, although maybe Djibouti, a growing country. Let's move our attention to international indices. Nikkei Nikkei all over the place. I don't see any trend right here, right now. The Nikkei is trendless. I'm going to say it's trendless, but I'd say also the volatility is coming to an end, or not coming to an end, but it's decreasing. What about the Hang Seng? Well, this is going to be completely different. This has taken off, hasn't it? Because stimulus in the United States, Hang Seng has just broken out. It broke out, in fact, it broke out from a downtrend on the 24th of September, and it's just kept on going higher. So the Hang Seng looks pretty good just because of stimulus, but I'm always dubious about stimulus because it's just, in my opinion, it's just kicking the can down the road. It's not solving problems. It's just masking problems. I've always had a problem with stimulus. I do know a story. I have heard a story. I don't know if this is true. I have heard a story that during the Asian financial crisis back in the late 1990s? It was late 1990s. Many of the Asian countries wanted to do a round of stimulus. And the Western countries said to them, no, you have to solve the problem. Stimulus is not the way to move forward. And apparently, again, according to this story, the Asian countries were shocked that the Western world just had a massive round of stimulus from 2008 onwards because they were told it doesn't solve problems. Anyway, I'm not sure if that story is true. I hope it is. I should do a bit of research to see if that story is true. Anyway, DAX Germany looks pretty good. Probably just behind the Dow Jones as my favorite. Well, maybe not favorite, but the best looking chart. But that looks pretty good. And the FTSE might be among my least favorite. Just going sideways since about April. It's just consolidating. Maybe that's what we can say. It's just consolidating. It's just doing really nothing, the FTSE. Okay, so that's the not the commodities, that's the indices around the world. Now let's pay or focus our attention to commodities. Let's look at gold first. So we'll have a look at gold, silver, and copper. Gold's just going sideways. Consolidate. This is good. This is good. It's been going sideways for about 8 days. A nice little uptrend, came to an end on the 24th of September. Now it's going sideways. This is exactly what you want to see after a nice little run. You want to see preferably a period where the commodity or the stock or whatever just goes sideways, takes a breather. So this is a pretty good looking chart. Probably one of my favorite charts when I'm talking about commodities, indices, and bonds and Bitcoin and all that sort of thing. So gold is one of my favorite charts right now. A beautiful looking daily chart. No complaints at all. Weekly chart looks pretty good as well. And it's a beautiful breakout. This should be studied for many, many years. Maybe not many, many years, but this should be studied when you're talking about breakouts. On the 4th of March, that week, beautiful breakout. Gold went up 4.6% on that week and just kept on running harder. I do have a story about M2 Communications back in 2014. That was a light bulb moment for me. Very similar chart. Then the share price of M2 Communications broke out on high volume. Don't have the volume here. And the share price of that company just went on a massive tear. That was the light bulb moment for me when it comes to technical analysis. It was a perfect breakout. Beautiful looking breakout. Can't show you because M2 Communications was taken out by, it was Vocus. And then Vocus was taken out by, I have no idea. Can't remember. Silver. Silver not quite as good. However, 4 pretty good weeks in a row. Silver's gone from 28 to 32. So, and it's right at a very important resistance level. Let's have a look at the daily chart. Yes, it is struggling. Silver is struggling to get above $32 here. You can see it. It got to $32 or around that level. We'll call it the resistance level on the 24th of September and has really struggled. So why is this level a resistance level? Well, because that was the highs back in May. And we know it's resistance, even if we didn't know that level, because the price of silver is really struggling to get above that. And whenever it does get above, you see these shadows, which is telling us whenever it gets above, there is selling for silver. And this definitely happened on the Friday session. We saw it get to a long-term high and then pull all the way back to below that resistance level. So the more it tries to get above that resistance level, the more likely it's going to succeed. So eventually it will break above that resistance level. That's the way I look at it now. I used to think that the more times it, like a price of something, touches a support or resistance, the more powerful that resistance or support level becomes. But I'm in the opposite camp. I think the more times it tests it, the weaker it becomes. So if it keeps testing it, eventually I think it will break. And we'll have a look at copper, because they're all related. Gold, silver, copper. This is the daily chart for copper. Does definitely looks better, and this is fairly similar than gold. It's been going sideways. A little bit of volatility in there. On a few days, we've seen the copper drop a fair bit, 2.1% on Thursday, but this looks pretty good as well. I like this chart. Not as good as gold, probably a little bit better than silver, just because, well, you could say there is a bit of resistance here. If you just put a line right there, that's the highs copper saw back in July. It is struggling to get above that high. And there is a bit of resistance a little bit further up as well, about $5.12. So copper looks pretty good. And again, just like silver, needs to get above that resistance level, but I do like it. Now let's have a look at iron ore. So iron ore had a pretty good week. So this is FEF2. I was looking at FEF1, but it didn't look right. I'm not sure what the difference is, but this looks much better than the previous iron ore charts I was looking at. And you can see iron ore going on a run because of that stimulus in China. And here's the most important thing about iron ore. Hasn't really done anything in the last 5 trading days. It's just gone sideways. This could be a good sign. So around about $108 to $110. It's just gone sideways. The volume has really decreased, though. If I saw this, I'd be getting... I actually think this is not that bad because no one's selling. If this was a company chart, I would say no one's selling. And because no one is selling, that means there's a better chance, a high probability, the price of this is going to go on a run. I actually do like this iron ore chart. So the longer I look at it, I do like it. Do like iron ore at this point in time. I would have preferred it if it continued to go down so I could take a position in some iron ore companies, but that's okay. Now, speaking of charts I do like, I like this one for uranium. This is a spot physical uranium. I just like this because instead of a line chart, it's a candlestick chart. And I like this one. This does look like the trend is changing. And we've had a few consecutive updates for the spot physical uranium. And understandably so, some of the uranium companies on the ASX are looking much better than they did in the past. So Boss Energy, it's probably not quite looking as good as it could, but definitely looking better. What about Palladium? Trying to find a really good looking uranium chart. Oh, doesn't want it to work. Not sure why. Might have to move on. PDN. No. Oh, it looks a little bit better. I wouldn't say these trends in these particular companies are trending higher now. So the trend hasn't... Oh, you could say that, because there was a little bit of a high in Palladium in August, and it's gone through that high. So it has broken the lower low, lower high downtrend definition with a higher high. So maybe Palladium's trend has changed. What about, what's another one? I know some people like NextGen. What's the ticker for that one? NXG, I think. NextGen. I do know some people like this one. They're all fairly similar, aren't they? They're all fairly similar, which makes sense. They're all uranium. And the distinguishing features between these companies probably pretty small. The only one I think is different is, for some reason, is Peninsula. This chart, for some reason, or this company, what's happening? Why is it so slow? I get easily annoyed. For some reason, the chart for Peninsula has always looked weaker than all the others. Don't know why. Just awful looking chart for your uranium company. Okay, let's have a look at oil. So oil's had a pretty good week. Karoon's had a good week. Santos probably a pretty good week as well. The increase in tensions in the Middle East has caused the oil prices to go on a bit of a run, but the downtrend in oil has not come to an end. I'm not going to call it just yet. I need a little bit of proof. A little bit of selling coming in on Friday as well. So oil did get to about $76. Now it's down to $74.39. But oil companies on the ASX have done a pretty good job. Karoon's gone on a little bit of a run. But I'm still not... Yeah, I wouldn't trade this just yet, but it has bounced off a support level. Santos, So I thought Peru was going to look better. What about Santos? It also bounced off a support level as well, and that was about 6 or so days ago, up to $7.30. Anyway, let's move on to natural gas. Natural gas probably benefited from what was happening in the Middle East as well. That looks a little bit better as too. According to this, lithium down 5%. That's still in a downtrend. Lithium is still in a downtrend. Coal up 5%. There you go. This is Newcastle coal. Sort of no trend just yet for coal. And then we'll go through some of these other commodities fairly quickly. Tin's had a good day. Nickel. Oh, nickel's on a bit of a tear. I just noticed that. You have to look at the line chart here. Really good tear for nickel. So let's have a look at a few nickel companies. 2 companies I do know and do focus on. We have Nickel Industries. Oh, that looks pretty good. I actually don't mind this chart for Nickel Industries. And the other one was Cettire Metals. I don't know why I know this company when it comes to nickel, but this chart looks really good as well. So Cettire Metals and Nickel Industries both look pretty good. Now, Cettire Metals is at the highs the company saw back in May. So you just put a line right there, and it's right on those highs. So this is just waiting for a breakout, particularly if nickel keeps going up. Not sure why nickel is on a run, but it's on a run. And finally, let's have a look at Palladium. Why not? And it's pulled back. Nothing much to talk about when it comes to Palladium, but I will say this. If this is a pullback and Palladium starts going up, there is an argument that there is a new uptrend trying to develop. So I would say the downtrend has come to an end, and we're starting to see possibly the beginnings of an uptrend when it comes to Palladium. Now, when it comes to Palladium on the ASX, I have no idea how to play it. It's just that Anderson, South African, for some reason, loves Palladium. And maybe he can tell us any Palladium plays to make, any Palladium plays on the ASX. Okay, let's turn attention to Bitcoin. And I'm bored already, so let's move on to Ethereum. And I'm bored as well. Yeah, I'm bored with both. So I do have a position in Bitcoin, but there's nothing here to discuss. There's no trend. Now, in saying there's no trend, I have a feeling bonds are probably looking a little bit different than you might think. In fact, bonds has gone on a bit of a tear in the past week, particularly the last 3 trading days. In fact, let's have a look at the weekly chart for the 30-year bonds. It's gone up, 3.6%. Don't think the market expected that. Now, it doesn't mean the downtrend has come to an end, but it has gone past the last highs we saw at the start of September, so 1 month ago, and it's right on the highs bonds saw on the 8th of August. But it's the very fact that bonds have gone on a tear since it reached a low 17th of September, and it's gone from 3.9% to 4.3%. That's interesting. Don't know what it means. Not sure what the bond market is thinking, but they're thinking maybe a little bit differently than what everyone else is thinking. Maybe they're thinking this drop in interest rates might fuel more inflation, and then eventually the Fed will have to increase interest rates again. Don't know. And you're going to see that similar theme playing out with the Australian bonds. There's the 10-year Australian. Massive day on Friday. Up 3.7%. There you go. And TLT, which is the bond ETF, is doing the exact opposite. So possibly a buy the dip situation when it comes to TLT. Don't know. And finally, the currency. So look at that. Beautiful. Not beautiful in terms of me, because I want the Australian dollar to go up. But look at it. It bounced off the resistance level. And now 2 big down days in a row. I would say that's in response to the bond market. So expectations that interest rates might not go down as much. Maybe that's it. And maybe we're going to decrease interest rates. Maybe, I don't know. Interesting. Okay, so that's it for the indices, commodities, Bitcoin, bonds, and all that in currency. Now let's have a look at some individual companies' charts. And I do have 12 lined up. Now, I've not gone through all the charts, so this is an incomplete list. So usually on the weekend, I go through all the charts looking for some interesting plays. but I have not done that because tomorrow is a public holiday. So I thought I'd give myself 3 days to go through some charts. But let's turn our attention to the first one, Gin. And there is a theme among some of these companies. And the theme is the share price of some of these companies are at support levels. And I have done this play in the past to success. So, but keep in mind, remember what I said before, the more times something tests our support or resistance level, the weaker it becomes. And Jumbo Interactive right now is just above a support level at $13.20. And it's tested that level 1, 2, 3, 4, 5, 6 times in the past month and a bit. 6 times in past month and a bit. And some of these right on that support level. Now, you could even say it's tested it more times because the share price has been just above that resistance level, support level for quite a few days, more than 6 times. And on Friday, it did bounce just off it. Yeah, it bounced almost perfectly off $13.20. In fact, the low on the day was $13.21, and it closed at $13.36. Now, after that really big down day, when the company released their results on the 23rd of August, share price dropped 16.2%. We didn't see any significant bounce, which tells me that the market wasn't convinced that this was a rational sell-off by the market. So sometimes when you do see the market thinks there's a rational sell-off, you will see a pretty good bounce almost straight away. A classic case of that is Elders. I'm just going to show you Elders right now. And I did make a mistake selling on, I forget what, yeah, it was on the 8th of April. There was a big sell-off on that day. Look at the bounce straight away. That was telling us the market was really skeptical. The market was saying that the market itself was irrational the previous day because we have seen the share price rally for Elders. But we're not seeing that with Jumbo. We haven't seen any significant bounce. And I think potentially the share price will fall through that support level. And the reason that's a support level is if we go back to November, December last year, the share price of Jumbo eventually did rally off that level. Eventually it did. But the more times it tested, the more chance it has to fail. Now, the big difference between last year and this year is there was no catalyst for the share price to drop last year. It was just a bit of a trend. This year, it was those bad results. And when I say bad, I just mean the market reaction was quite negative. Look at the volume as well. MaxiParts, they sell stuff. I'm assuming they sell truck parts, bus parts. Let me confirm that. Provision of production and supply of trailing transport equipment and solutions. So more trucks, I'd say, than buses. Axles, suspensions, tyres, wheels, and brakes. Okay, so why am I interested in this one? We're not interested, but it is more interesting than some other charts. The share price of MaxiParts is right, or has just bounced off in the last few weeks off a support level at about $1.75. If we look at the weekly chart, in fact, this is, I think, why I was interested in MaxiParts, because I was actually looking at weekly charts. So with Jumbo, yeah, that's a weekly chart. But with MaxiParts, this particular support level goes all the way back to 2020. And initially, this was not a support level. It was a resistance level. Share price pulled back off this level back in November and then rallied through it in May. And look at the share price, just gone a massive run as soon as it broke out above that. And then the share price pulled all the way back from the high, all the way back down to that level, almost perfectly. Then it sort of had a weak bounce and then came back, got very close to that level again. Then it went on a nice little rally. And then it is testing that level again. It's been testing it. It tested it for about 4 days out of 8 trading days. And we have seen it MaxiParts share price rally a little bit. We also saw a really big spike in volume. It could have been just a one-off, like a one trade, but there was a bit of volume the next day as well. That can be a good sign that someone sees value in this company at these levels, but we haven't seen much volume since then. So numerous reasons why this is interesting. Doesn't mean I'll take a trading position in this company, but it is interesting. I probably like this chart a little bit more than Jumbo Interactive. Now onto a company I actually do own, PWR Holdings, and this is interesting. So again, I decided to look at this via a weekly chart and include this company in this particular video because of the weekly chart. And this goes all the way back to 2020. In fact, the lows during the COVID-19 financial panic, and if you just draw a line from those lows to the lows in June 2022, when we saw that really big weakness in the market, if you just continue that line, which is the uptrend line, the share price of PWR Holdings is right on that as we speak. And if you notice, the last 5 trading weeks, the share price of this company is sort of going sideways, maybe very, very slowly drifting lower, but there has been a lot of indecision. So almost dojis for 5 weeks in a row. And dojis are where you get the main body and then there's a shadow above and a shadow below. So a lot of times a doji, the main body is it's just like one price point. But that's telling us that there's like a fight between the bears and the bulls. And that's been happening the last 5 weeks. And I think one of the reasons why that's been happening is because the share price is at that uptrend line. Possibly also, there are some investors out there saying, well, the share price has dropped a fair bit over the past few months, and there's now pretty good value in this company, particularly when you look at the potential growth of this company over the next few years. So I'm not selling my position in this company. The big question I have, should I add to my position? PE ratio 35.44, but it has been significantly higher in the past. If you have a look at the daily chart, you can sort of see it's just straddling that upward trend line for about 3 or 4 weeks. But then it fell through it on Thursday. But then on Friday, it rallied and the share price closed right on that uptrend line. Well, I'd like to see the share price get back above it because that uptrend line now might be becoming resistance, not support. Okay, so that's PWR Holdings. This is a company I do own in my high-quality portfolio. There are questions whether this company is high quality, but I think it's quasi high quality. If you don't know what quasi means, for those who don't know, one of my favorite things in meteorology is quasi-geostrophic theory. Quasi meaning is just sort of almost, resembling, having some but not all of the features of quasi. So almost, apparently but not really, seemingly. Being partly or almost. There it is. Almost. At least I know what that word means. And now on to Air New Zealand and talking about support levels. This is Air New Zealand. And again, hopefully this should be quite obvious why I've included this company into this particular video with this theme, support levels. So Air New Zealand share price back during the COVID-19 financial panic fell to 50 cents. Share price then rallied. And then in June 2022, when we saw overall weakness in the market, share price of Air New Zealand fell to 50 cents. Yes, 50 cents. And then back in April this year, share price of Air New Zealand fell to about 50 cents. Now, it did fall below 50 cents. I went, oh, this is interesting. But we have seen the share price sort of go above and below 50 cents over the past, I'd say, about 5 months. You can see in the daily chart, it's perfect. It's gone below, broke through below, it's gone above, above, and then below again. So it's sort of the share price of Air New Zealand is straddling 50 cents right now. Now, back in April, May, when the share price fell below, we did see a lot of volume coming in. So obviously the market knows 50 cents is an important level for Air New Zealand. Now, I would say and maybe argue that Air New Zealand is way more attractive than Qantas just based on valuation. You could argue Qantas is a better quality company, but there is big differences between the two charts. So Air New Zealand is in a downtrend at support, while Qantas is in an uptrend. Yeah, so there's big differences between the two companies, and I would say Air New Zealand is probably better value than Qantas, but the chart doesn't look as good, except maybe it's at support, and maybe eventually the share price will go on a bit of a tear. Anyhow, Air New Zealand, Sky City. Why did I include this company in today's chart? Let's have a look at the weekly chart. Oh, yep, it's pretty obvious why. Okay, and I actually didn't draw a line here, but I didn't need a line. Okay, this is something I did a few years ago. I looked at all the COVID-19 lows for many companies, and I was thinking, well, if the share price of these companies falls to those levels, that's probably going to be a fairly significant, important support level. And it has played out fairly true over the last few years. Whenever a company falls to COVID lows, that can be a support level. And lo and behold, Sky City, even though there's a lot of negative sentiment in this sector, share price of Sky City has fallen to those lows, and we have seen it bounce off those lows. And that low, COVID-19 low, is around about $1.20. So if we have a look at the daily chart, we can see it bounce beautifully off it on the 20th of September. Now, I would not say again, because the bounce was not that impressive, but there was pretty big volume coming in on that day. So again, someone out there knew that $1.20 was a support level for this company. And then we did see the share price rally a little bit up to $1.40, and it's pulled back a little bit. I just think there's a lot of negative sentiment in this space, and there is still room for Sky City to fall further from here. And if it does break below $1.20, that will be fairly negative. But potentially $1.20 is the floor in Sky City's share price. And maybe, who knows, maybe some good news will come flowing through some of these companies. But the trading update that Star released the other day was not that positive. Tabcorp. Oh, this is another very similar theme. Look at the weekly chart for Tabcorp. Now, this company did, what's that word? They demerged, or they flung out the Lorry Corporation. So it's a little bit different company now than it was back in 2020, but similar theme than Star City. Looking at the low, COVID-19 lows for this company was about 40 cents. Not sure if this is adjusted for, I have a feeling this is adjusted. This chart is adjusted for that splitting out or that demerger. Anyway, so this company's share price did get to a low of 40 cents. And then for some reason, the market absolutely has hated this company since May of 2023. Share price has fallen from $1.16 back down to 40 cents. So we're talking about a 67% drop, almost a 2/3 drop in share price in a fairly short period of time. And it's been brutal some of these months or weeks. And then if you have a look at the daily chart, look what it's done off 40 cents. It did fall through 40 cents briefly for a few days, and then it rallied. Some good volume has come in since that rally. So share price has rallied from 40 cents back up to 47 cents, which is a nice 20% gain, by the way. So this is, again, another instance where the share price has bounced off a support level, which is the COVID-19 lows. Doesn't mean I'll take position in any of these companies, but it's an interesting theme. You could play it. It does work sometimes. I have used it, and yeah, it does work. Okay, this is not quite a bounce off COVID-19 lows because this company doesn't go that far back. Now, this is Tourism Holdings. They did release a negative announcement on the 6th of May. Share price dropped 57% on that day. But interesting enough, the low on that day was $1.65. And the share price has really struggled to fall below that low, which means potentially the market is thinking all the bad news has already been priced in the company. We haven't seen the share price fall. So this is a good sign moving forward for Tourism Holdings. So the way you could play this one is you buy at these prices, $1.64. Share price, you can see it. It's tried to fall below $1.64 a few times and has failed. But again, does that mean this level is weaker because it's tried many times and it's failed? Is it weaker now? And does that mean there's greater chance it might fall below $1.60 in the future? Possibly, but a low risk way to trade this is just to buy at $1.64. And if it does fall below, just sell with a very small loss. So it's sort of a low risk, high potential reward. When I say high reward, you could be looking at 20, 30% gains, 50% gains, possibly even. Particularly if the company releases some good results or good news. Ideally, that's the way I like to play these sort of situations. When a company releases some good news, that's when you go in. You might miss a little bit of a gain, but there's less risk. But again, this is sort of less risk because there's not much to lose. TPG Telecom. Now, I'm pretty sure I featured this company in one of my technical updates videos recently, because if you look at the weekly chart for TPG, share price of this company has been in a downtrend ever since they did something back in June 2020. Forget why they relisted. Why, I don't know, I can't remember why. But there's no doubt this company has been in a downtrend. And it's a very well-ordered downtrend. You can see the peaks in the share price almost perfectly correspond to the downtrend line. We've seen it a few times now. And you can see the share price on the 26th of August. Let's go to the daily chart. 26th of August, or 34th of August, when they released their results, share price rallied 8% on the day and closed at the downtrend line. And it looked like the share price was trying to break out. So a few days later, it did break out, but then fell back below the downtrend line. And then on the 26th of August, it again on that particular day closed right on the downtrend line. And after that, we have seen some positiveness. So potential breakout when it comes to TPG Telecom. So again, the more times it's tested this line, the more likely it's going to fail. And maybe we have seen the first signs of a fail to this downtrend line. So possibly the downtrend to TPG Telecom has come to an end. So this chart does look interesting to me. I actually do like this chart, probably more than some of the other charts. Now, PeopleIn, I did mention PeopleIn in my answer and reply video, I think, the other day. This is a perfect. You can draw a lot out of just studying and looking at this particular chart. PeopleIn, PPE, downtrend, well-defined downtrend. No reason to be holding this company. Now, even if we go back to 2022, 2023, share price fell a lot in 2022, fell down to $2.50. So that low was a support level. Share price rallied, went from 250 all the way back up to 388. So that was a pretty significant rally, but it failed. It fizzled out. And then the share price bounced off 250 in March 2023. Now that rally wasn't quite as significant, but it was still went from 250 to 310. And then share price fell through 250 on the 7th of June 2023. And it just kept on falling. And then there was a rally. And look what the share price did. It went back up to 250. This is a perfect study of the importance of support and resistance levels. So for anyone who thinks a technical class does not work, just have a look at this particular chart. Maybe best way to say that, if you believe and think that resistance and support levels don't work, just have a look at this chart. 250 was a support level, then it fell through, it became resistance, and look at the share price. It tried to get above 250 for about 3 weeks, and it failed. And then it tried to get above 250 again on the 25th of August. Results were released. Market didn't like it. Share price started to tank. And then share price fell from 230 all the way down to $1 after their results. And then look what happened when the share price got to $1. Really big volume came in. I did take a trading position in PeopleIn on that day because of the volume and because I knew $1 was a support level for this company. The reason I say it's a support level is, lo and behold, well, what's that? Look at the lows back in COVID-19, $1. It wasn't an exact low. The exact low was actually 90 cents, but it went from 90 cents to $1. So in the weekly close, it was actually $1, right on $1. So I knew $1 was a support level of this company, and then we saw, look at that volume. You see that volume. As the share price rose, massive volume came in that week, and the share price went from $1 to $1.40. I took profits at 20%. I could have taken profits at 40%, but I wasn't sure when the share price would reach that high. So let's go back. There it is. And $1.40 was about 2 months after I bounced off $1. And then the share price went back to $1. And look at what happened. It stayed above $1 for a while. Now, you see no bounces off $1. There was very weak bounces, and it just peppered $1. The market just kept peppering $1, and eventually it fell through $1. Beautiful trading here. Fell through $1 on the 24th of April, and it didn't test it. It just kept on falling. And this broke the bulls. That day broke the bulls. So we went from a bull saying, oh, I think the share price is going to bounce off $1. And that day they went, nah, that's it, I'm out. And the share price went from $1 down to below 75 cents in a fairly brief period of time. Share price then rallied back up to $1. So what do you think? Share price went from 75 cents to $1. What do you think is going to happen at $1? The market knows that $1 is now a resistance level, and they're going to sell off. And that's exactly what happened. No volume, very little volume. Share price fell back to 75 cents. Oh, funny enough, I haven't drawn this line in, but that 75 cents level, actually 70 cents, 70 cents, is a support level now. And the share price is at 86 cents. I just like this chart. It's a beautiful study in resistance and support over the past about 3 or 4 years. Beautiful. You just have to study charts. Okay, so that's PeopleIn. Beautiful looking chart. Oh, by the way, before I move on to the reject shop, if I saw the share price break above $1, I will go, maybe not all in, but I will take a trading position in PeopleIn. I am going to say that right now. I'm going to take a position in PeopleIn if it breaks above $1. And I do look at this particular chart every day, or every second day at least. The reject shop. Okay, talk about support levels. So $3.10 is a support level for the reject shop. It goes back to June 2022. Not quite the COVID-19 low. So the COVID-19 low was actually quite a bit lower, or maybe not quite a bit. It was about 250. But this was the June 2022 low. So that is a support level for this particular company. But have a look at the share price of the reject shop over the past, well, since June. So we're talking about 4 months. 4 months, the share price has been just trading above that level. And for days, for many days, it's just been above, just slightly above that level. And we haven't seen any significant bounces. It tried to bounce in August. So it looked like it was bouncing just before they released their results. I'm assuming they released their results on the 22nd of August. Share price fell 10% on that day, and the share price closed right on that support level. Lo and behold, but there was no bounce after that. I would assume, I'm just making a bad assumption here. If I had to guess, probably that's better than saying assumption. If I had to guess, I would guess that the share price will fall below that resistance level. But if the share price keeps on going sideways, keeps on consolidating, that actually could be good news moving forward. That eventually, when the company does release something strong, something significant, the share price might go on a rally. So there is a chance that this level does hold. But the more it stays and consolidates at these levels, I think there's a chance the share price will drop below $3.10 or so. Shaver Shop. Why? Oh, this is a little bit different. So Shaver Shop, if you look at the weekly chart, has been in a trading range for about 4 years. Yes, actually longer than 4 years. It moved into this trading range back in the middle of 2020 and has been in this trading range ever since. Very briefly has a share price dropped below or above this trading range. So trading range is between 96 cents and $1.24. And you could have been trading this, buying at 96 cents, selling $1.24, and you would have done fairly well trading Shaver Shop over the past 4 years. You might have got a little bit freaked out back in June 2023 because the share price did fall below 96 cents for a couple of weeks, then rallied again, back up to $1.24. And then the fall wasn't quite that strong. Now, the share price for Shaver Shop has been, or the market has been peppering $1.24 numerous times over the past 2 months. You can see it hit $1.24 perfectly back in February, hit it again in July, and then again in August, and again on Thursday. And then on Friday, it fell back below. So the market is peppering $1.24. It's testing it, continually testing it. And I think eventually it's going to break out. So I'm keeping a close eye on Shaver Shop. And this would be a nice little trade on a breakout. Anyway, so this is a potentially good-looking breakout candidate. Or Cettire. Cettire. Yes. I am going to leave my bias out when it comes to companies. Just look at the chart. The volatility in Cettire does turn me off a little bit. I don't like volatility, a lot of volatility, because day traders love volatility. I'm not going to say I don't like day traders, but they can do weird things. Day traders combined as a whole can just do really weird things when it comes to shares and charts. Just have a look at Appendix. Anyway, so the company released something really negative on June, 24th of June. Share price dropped 50%. Share price did drop to $1. Oh, look at that, right on $1. And so $1 is a support level. It's done a few times now. It got very close to $1 twice. And then what happened on the 24th of September? Was that the CEO buying some shares? I forget. Share price did rally 79% on that date. And understandably, it was just an irrational rally because the CEO bought some shares. Who cares? I think that was it. I can't remember now. 24th September, let's confirm my hypothesis, or maybe not hypothesis. 24th of September, Direct initial. Annual report. That's right. Now I remember. Annual report. The auditor ticked off. Yeah, again, I don't understand why auditor ticking off on the annual report leads to a 79% rise in share price. I could sort of understand maybe there are shorts covering their position, but I'm not surprised the share price has dropped significantly since then. Share price went from $2.40 all the way back down to $1.80. So it's only about a 25% drop in share price in a fairly short period of time. But notice what the share price has been doing the last 4 trading days. So I do have this horizontal line, which is a support line now. Why is that $1.75 or so a support level? In fact, it's $1.78. So share price on the 12th of July rallied, then pulled back significantly, and the pullback started when the share price got to $1.78. Share price tried to get above $1.78 on the 9th and 10th of September, and then pulled back. So $1.78 was a resistance level, and then when the auditor ticked off on the annual report, share price zoomed past that resistance level, so now it's become support. And look what's happening in the last 4 trading days. Share price has just remained above that support level. So this could be a nice little play right now. So again, a low risk play, Cettire. Ooh, I just hate myself for saying that. This could be a trade just based off this chart. So just ignore Cettire. This looks like a pretty good chart. Yes, looks like a pretty good chart. I would not be surprised to see the share price rally from here. Put it that way. Maybe I should take a position. Anyway, that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.